Hello guys, welcome to the Solid as a Stock session. Hopefully it's obvious what we'll cover. We're going through stocks today. I'm just going to put the disclaimers up on the top left hand side of the screen, so please read those, not just for legal reasons but also to understand what you can expect from videos like this. Obviously in sessions like this where we're looking at markets in live real time, we will be looking for new opportunities. We will be going through opportunities that we've already gone through before. What happened with them? Did they win? Did they lose? Did they break even? Did we cancel them? And like I said, we'll look at new opportunities as well. Now, I've also got my eye on a couple of chat boxes. In fact, let me make sure that I've got all of them open. Got my eye on a couple of chat boxes. So you guys let me know if you have questions as we go as well. I'll always keep my eye out and try and help you. Hi, Fernando. Can just see you there. Brilliant. Glad it's loud and clear. Okay, so just to confirm, we're going to go through the current market environment, trade review, trade management and trade execution. Now we are streaming to multiple places at the same time. We're on Facebook and YouTube and LinkedIn and loads of other places. We're also streaming within our closed coaching community that we're in at the moment as well. So what we'll do is after we find at least one trade, that's normally how we do things, we'll cut the stream to the free platforms and continue within the closed coaching because people pay a small monthly fee to have access to that. So essentially they get twice the time. It's normally roughly how it works. It's normally around about the halfway point is where we'll find a good trade. Okay, so let's get started. Let me just remind you guys as well, for those of you that might be new to the channel, that you can go to tradewithufos.com/Becky to find apps that you want to download and use, depending on which platform you use, to book one-on-one coaching. But to me, the most important bit here is that you can use this space to ask questions. I'd rather you use this space to ask questions than email me. And that's because if you post a question here, I can answer it here. It also means I can draw on that question and use it perhaps in a video. So you get a whole video as a response to your question because it's been posted publicly. So if you're comfortable to do that, please do. Otherwise, you can email me and it's becky@traddictiv.com. Okay, so first things first, let's look at the markets that we looked at last time. And let me just make sure I've got my little notes here of the ones that we took last time as well. So we'll keep that handy. Okay, so we looked at Air Transport Services Group, and this was placed in the live session, meaning the session that was streaming for everybody. Now, what happened to this trade? Now, depending on how often you look at it, depends on what happens. We're going to assume that you are following the methodology correctly and you're checking in on this regularly. So we placed the trade on the 24th of September in the live session, round about this kind of time, round about here. Now, it triggered on the 27th of September, which meant by triggering on the 27th of September, it triggered when the auto climate had changed. So if you'd have been checking on the 27th, which was a Monday, if you'd have been checking on the morning of the 27th or during the day of the 27th, you would have cancelled this trade and therefore not got into it at all. Now, let's say you hadn't looked at it at all, you hadn't checked in and you just left it. Well, then in which case this would have been a losing trade because price went straight through and hit our stop. Now, it went straight through and hit our stop because by the time Monday morning would have happened, we would have had an unconfirmed climate. We would have had a change in climate and therefore it would have reduced the probabilities. So ideally, we're checking on them regularly. If we're checking in on them regularly, we wouldn't have been in this trade. It would have been cancelled. If you left it, would have been a losing trade. So that's for ATSG, Air Transport Services Group. Now, the next one we looked at, CNO. This was in the closed coaching. We tend to get through 2 or 3 trades in the closed coaching. This one, similar situation. In fact, actually, no, we would have placed this trade. So this one would have just been a losing trade. So we placed it on the 24th, but on the 27th, which was when it triggered, we still had a thick red dot. We still had the EMA lining up. So we would have still been in this trade. Whether you looked at it or not, we would still have been in this trade. And of course, price went through, stopped us out. So this one was a losing trade. So far we've had a cancelled trade and a losing trade, assuming that you're following the methodology exactly and checking in on this regularly. So that was CNO, Financial Group. Then we had FLO, which is Flowers Food. This one, I believe, was a losing trade as well. So here we had triggered on the 24th, moved around a little bit, came out, pushed out a little bit, and then went through, stopped us out. So far, we've had 2 losing trades and 1 cancelled trade. So that's FLO, flowers, foods. And then the last one we looked at was X-ray. X-ray. There we go. So with this one, this worked out a lot better. If I squidge this down, then we can see. With this one, we got in. We would have been triggered on the 27th. In fact, it would have come on this time. We triggered on the 27th. We hit our safety target, and we're still en route to our final target. The climate hasn't changed, so we would still be in this trade. It would still be open, but at a profit. If this starts to move against us and the climate changes, then we would get out, let's say around there, and we'd still be out at a profit. If we left it, didn't do anything entirely, and price came right against us, and we didn't realise that the climate had changed, or we didn't realise what was going on, then it would be a break-even trade, because we'd have taken half there and then lost half there. If it continues to go down, slowly but surely, and the climate still stays down, then we'll get out at this point, and we would have taken a very decent profit out of this trade. This is the really great thing about the trades that we place and the safety targets and the final targets. When price hits our final targets, more often than not, it will more than compensate for the losses that we've taken along the way. This trade works out, I'm guessing that's probably about a 10 to 1, that one, and then this one's a 1 to 1. So call it overall a 5 to 1-ish trade. So if we have a 5 to 1 trade, where what we've made is 5 times more than what we've lost, even in this case where we have a cancelled trade, 2 losers and then a winner, if this was to hit the final target, then we've lost 2 but made 5. So overall up, even though more of our trades lost than the amount that won, if that makes sense. Now, of course, like I said, this might move against us and perhaps we get out manually somewhere along here. Perhaps it comes straight against us really quickly and this becomes a break-even trade, which would be a shame, but we'll see. So this one is still open, still on, so far at a profit. Hopefully that makes sense so far. And let me know. I'm keeping my eye on the chat boxes, see if you've got any questions. It doesn't seem like it so far. So what we'll do now is we'll move on to look at new opportunities, and I'm going to use the top scanner to do that. So top is Tradictive Options Planner. This is our platform. Now, by the way, Jose does sessions on Sundays, sharpening sessions, which are all about top and all about the mechanics behind things and the indicators on them and how you do stuff on top. I use it myself for my stock trading, but I don't know as much of the technicalities as Jose does. So if you have questions on technical things on top, saving them for Sunday afternoons, or depends where you are in the world, but saving them for Sundays is a good idea, because Jose is more likely to be able to help you with those things. As far as using top for scanning stocks and finding opportunities, that's my thing, so we will do that today. Now, first things first, what we want to do, and you can see that what I've got open at the moment is the S&P. I'm looking at the ES, which is the futures contract, continuous futures contract for the S&P 500, which is the top 500 US stocks. Why am I looking at that? Because if the top 500 US stocks are going in a particular direction, then individual stocks within that are also likely to be going in that direction. So what that means is, if we found an individual stock that had, so in this case, probability is down, although I'm going to come back to this in a second, but just to finish this theory. In this case, probability is down, and therefore if we found an individual stock that on the same time frame that was inside this index also had probability down, then what we've got already is a probability on our side, which is that it's correlated. If we had probability down on the US stock market as a whole, but we had probability up, say, on an individual stock we're looking at, we can still have a look at that stock. We can still go long. It's not to say that because it doesn't correlate, then we have no trade. Not like that at all. It just means we don't have correlation on our side. So we lack a little bit of probabilities. So I like to look at the ES first, because if the ES is going in a particular direction, then I'll look at stocks that are also going in that direction by using the scanner in that way. Now, saying that, those of you that use AutoClimate will have an understanding of what I mean here. So I'm just going to spread this out so we can really see it. With the AutoClimate dot that we have right now, it's thick and red. That tells us probability is down. However, you'll notice this line here is below the dot, quite a bit below the dot. Now, why is that a thing? Now, if we squidge this back up, you may notice that every time a line went below the dot, you had a different coloured dot next time. This went below the dot, it was a red dot, it went below it, you had a blue dot next time. This was a red dot, the line went below it, you had a blue dot next time. So each time we have a line below the dot, the following candle, the following dot, is usually the opposite colour, or maybe unconfirmed. So it might be that this red dot, this is a weekly chart, it might be that come Monday morning we see a thin blue dot or a thick blue dot. We're less likely to see a red thick dot, unless price were to drop significantly for the next few hours that the market's open. Hopefully that makes sense as to why we're doing that. Cool, I'm just seeing there so far so good. All right, good, good. So, oh, by the way, Steve, I hope that answers your question as well on the correlations. That just because the S&P is doing one thing doesn't mean that we can't take a stock that's going the other way. It's just ideally you'd have that correlation on your side. Now, like I said, with this particular situation, because we have the line gone quite below the dot, price is pushing above that moving average. Yes, it's on its way to sell orders, but I'm unlikely to hit that and drop a lot by the end of the day. I would say by the start of next week, we're going to see a different dot there anyway, more than likely. So if that's the case, we don't want to be going short if on Monday we're likely to have a climate that's not short, which means we're essentially going to ignore this for today and we're just going to scan for stocks either up or down and look for decent opportunities. Now I'm going to actually go with buying opportunities to start with, unless you guys have a preference. The reason I'm going to look for long opportunities is because in general the US stock markets, or stock markets in general, are built to go up more than they are built to go down, which means usually you would have more probability to the upside in general with stocks. That obviously doesn't work when we have crashes. If we were to look at, let's just take this to a monthly just to prove the point. When we have crashes, which happen, as we know, let's come back to 2008, 2000, let's see this on a chart. So when we have these situations where the market goes down, of course, the probability was down and the auto climate was showing us that. As price went up, most of the time auto climate's been on the upside. And as we can see here as well, the market would usually, actually, that's interesting. It says it usually goes down for 11. That's interesting. Okay. I was going to make a point then, but I'm wrong, so I won't. So what I'm saying is that overall, the markets are likely to go up. That's not true in crashes, of course, or when we have these little dips, but more than likely, the stock markets are built to go up. So let's look for long opportunities, unless you guys have a particular preference to look to the downside. So what I'm going to do is open the matrix, which is our scanner. And I am going to put in some filters. I'm going to do a minimum price of $15. The reason for that, it could be 10, it could be 12, it could be 5. The lower the price of the stock, the less likely it is that there is institutional interest in it. Because if there was institutional interest, meaning they're buying millions or they're buying hundreds of thousands at a time, then there'd be a lot of money going into that stock, therefore the stock would be more expensive, if that makes sense. So it doesn't have to be 15 exactly, it could be, like I said, 10 or 5 or whatever, but we normally go for 15. And for those of you that use the TradeStation scans, you'll notice that those are set to 15. Max price, I won't have a max price just because obviously we all have different amounts of money, different amounts of capital in our account. Some people are not necessarily going to be priced out of stocks. Most people, I would be priced out of certain stocks. I wouldn't want to be placing, 10 shares, 100 shares on stocks that are worth a few thousand a share unless you're using some form of derivative. To me, it's inefficient. So I won't put a max price on just because then we can look at everything. And those of you that are trading this can decide for yourselves what makes sense in terms of your capital. I'm going to look at stocks and ETFs, and the only thing I'm going to filter by today, the only thing we're going to look at is auto climate, and we're going to look at weekly, not daily, we'll look at weekly, confirmed up, sensible, meaning towards the start of what would be a usual move to the upside, and we're going to go near the 9 EMA. So we're essentially looking for something that's going to have probabilities to the upside with close or near opportunities. I'm going to click scan, see what we've got left. So I'd say we've now got, what, 15 stocks that we can go through one by one. What I'll try as well, we'll see whether or not this eliminates a lot, is I will exclude earnings that come out, within the next 3 days. So let's see if that makes it a shorter list. Didn't really make much of a difference. And what I'm going to do, I'm going to sort by symbol, and the reason I'm going to do that is because if you do it by the price or by other things, it changes, and so we can go through a list and then end up looking at the same thing again. If you guys have specific stocks you want me to look at, by all means let me know in the chat boxes. I will take a look. Otherwise, we're just going to go through these one by one and find if we have any opportunities to the upside in this case. If we find none to the upside, then we'll look to the downside, because we're not necessarily following what the ES is doing today. We're looking at individual stocks and seeing what's going on. So this is Apple Hospitality. So it's not Apple, it's APLE, but it's Apple Hospitality. So it's not Apple as we know it. Let's have a look at what we have going on. Now, it looks like we have no UFOs on the right, but it looks like it's loading data. I'm going to double check that we do have UFOs on here. That's cool. Okay, let's have a quick look there. So in this situation, I'm just going to get rid of that. Showing that as an example last time. Okay, so in this situation, what we have, I'm just making sure my head's not in the way as well. What we have is, for those of you that don't know, for those of you that do, bear with me. For those of you that don't, I'm just going to explain very quickly what we have in front of us. So first things first, when we trade, we want to know, do we have probabilities up or down or nowhere, so that we know whether or not to buy, sell, or do nothing. In this case, we've got a thick blue dot there. That tells us probability is to the upside, meaning we should look to buy. Now, when it comes to buying, that doesn't mean that we just click buy at whatever the price is now. As not a very consistently right way to do it, shall we say, because it means that you're just buying in the middle of nowhere when you happen to be looking at it. We want to be buying in areas that give us greater probability that it works, gives us a place where we can reduce our risk and define our risk, and be able to take as much profit out of here as possible. So what we do to define where to buy is we're using these UFOs, which are these green boxes with these little UFO icons in. Tells us the prices as well between where we find these buy orders. That's what the green UFOs are. They're showing us buy orders. Now we combine that with the EMA on the bigger time frame. Now we combine that with the EMA on the bigger time frame, which by the way is this red price here that we see, which coincides with this red line. Because at the EMA, which by the way stands for exponential, there you go, I think I spelled that right, moving average, EMA. The EMA is simply a line that gives us an average of price and it tracks price. It's exponential because it gives more weight to the more recent price data. In our case, we use a 9 EMA, which means it's looking at the last 9 candles, but you can pick EMAs that have different lengths as well. So we're using the 9 EMA. Now, why are we using that? Because a very common way of trading, and I'm just going to expand this out real quick. Very common way of trading is if we have our EMA at this price and our current price is here, that if price were to come down and hit the price of the EMA, people buy it. And just by the act of buying, it can push price up. If you have more buyers than sellers of anything, price goes up. So people are doing that. Not just people like retail investors, but we're also talking about fund managers and things will also do things like that. Get in at average prices using the moving average. So you've got buyers that would come in at that point if price is above the EMA. The reverse is true for selling. If price is below the EMA, people sell at it. So what we want is we want people that are buying at the EMA to also coincide with this stack of buy orders that we already know are there from our AutoUFOs. Because then what we have is buyers and buyers at the same place in the context of a market that has probability upwards. So it just gives us 3 different things going in our side, 3 different correlations, 3 different confluences, whatever you want to call it. 3 different things that are going on our favour to the upside. Now in this case, oh, we were using a monthly. Need to go back to the weekly and check this out. In this case, actually, we don't have a trade. I just realised we were using the wrong time frame then. Yeah, thank you, Fernando. I just saw that. You're right. I'd shown you the monthly just to show you what the stock market looked like over time and forgot to switch it back. So you are very right. The weekly should go with the 144. So in this case, we actually don't have a trade, and that's because same situation, probability upwards, great. We have the buy orders are still there. However, the EMA value is at 15.6756, which is around about here. doesn't coincide with the UFOs. Did coincide with the monthly one, but you're right, these are the timeframes that we use together. Weekly with a 144. In which case, we don't have a trade on this one. Now that I've explained that once, I will go through quickly with the others and we'll click on them one by one to see where we have different trading opportunities. And thank you for calling me out on that, because I might have done a whole thing where I'd done the wrong time frames. So let's wait for this to load and see what's going on. Whilst we wait for it to load, as we see, we've got probability upwards on our climate. We have actually UFOs on the bigger time frame, which is also nice to have close by. However, our EMA, which is 15.1567, which is out here, is nowhere near a UFO. So no worries, back to the matrix and we'll find a new situation. CIM, Chimera. We don't have a trade here either, because, and also there's a few reasons. That's weird, that seems to have bugged there, but we can see what we're looking at. Now, one of the reasons why we wouldn't take this trade, yes, we have probability upwards. One of the reasons is because the EMA is not coinciding. The EMA is like here, so it's not coinciding with the UFO. But also we're either within or very close to sell orders by the looks of it here. It looks like we are within sell orders. You don't want to be buying when you're within a big stack of sellers. It's going to go against you, or more likely to. CINF, Cincinnati Financial, I assume. Nope, nothing there, and the reason for that is because, as we can see, you might not be able to see, the EMA value is just underneath current prices, like here. So nowhere near a UFO, no problem. And this is what's good with using technology to do this. It's just we look through very quickly. I'm going to tell you very quickly, no trade there. Same thing, EMA not lining up. I'll go through quickly, hopefully we'll find one. If not, we'll look to the probabilities to the downside and go from there. No trade here either. So the good thing with using technology is just you click through, and once you know what you're looking for, to line up, you click through, and if you find a good opportunity, great. If you don't, you move on, and you find out very quickly. You're not analysing things with your eyes and doing calculations and things like that to be able to figure out whether or not you have an opportunity. So no trade here. It looks like our closest UFO is quite a way down there. Our EMA is at $17, so nothing there. Let's just keep going. MNR is the next one here. Monmouth. I think Monmouth. I would say Monmouth. Okay, we have a situation where, yes, I've lost my mouse for a second there, where yes, we have an EMA that coincides with the UFO. So the EMA is 18.96, which is here, just inside this UFO. Now, I think this will work out. What we need to bear in mind is that EMA stands for exponential moving average, right? So as price moves, so too does the EMA. It will move with it. And so if the EMA is currently here, then if price were to move down, the EMA would also move down. Now, it may move outside of the UFO. If it moves outside of the UFO, by the time price would hit the top of the UFO, then we would cancel the trade. But I think, based on my experience using this, I think this should work out in our favour. So let's have a look at this and we'll place this trade. Oh, you're from Cincinnati. Brilliant. I know we were looking at that one and it wasn't a trade, but nice to know, Fernando. Steve, brilliant. I'll have a look at that JNPR in a minute as well. So we'll put this one on first. And then when we cut the stream, we'll have a look at your suggestion as well, Steve. Thank you. So let's come to our trading view. The reason, by the way, that I flick to trading view to do this is because I like the calculations that it lets us do. I like the order panel on TradingView. Now, sometimes, by the way, what we see on TradingView is not the same as what we see on top or on TradeStation. It's just using slightly different data. So we are going to use the top data and ignore the data that we see on TradingView. We're just using it for its calculation. It was MNR. So just to look here, it's 1906 to 1895. I'm just going to make a note of that here. So 19.06 to 18.92. And what we'd actually do is take a few cents off that anyway. So 1882 it will be. Brilliant. So now I've got that as a reference. I don't need to keep flicking back. So as you can see, we're looking at MNR on both of these. I think we're looking at, yeah, MNR, stock, Monmouth. Yep. So we're looking at MNR on both of these, but what we see on the right hand side is not what we saw on top. Again, we're going to ignore that and we're going to take the data that's on top because that's the data that we're looking at. So what I'm going to do here is draw my Fibonacci lines. For those that use Fibonacci as it was intended, I'm sorry, I don't. I use it as a drawing tool. It just helps me to visually see what's going on and visually see where I'm placing trades and things like that. Now the good thing is on both sets of data that we're using, both sets of data, we can see that we are also coinciding with bigger time frame buyers. So if we go back to top for a second, we now have probability upwards. We're also good on our sustainability stats for those that look at that as well. So we've got probability upwards, we've got buy orders here that coincide with the EMA, also within more buy orders. It's just loads and loads of signals to the upside. Now, as we know, just because something is probable doesn't mean it's definite, so we'll still manage our risk, of course. But looking good is what I'm saying. So I'm going to use the order panel here. 19.06 is the entry. The stop loss will be 18.82. And I'm going to just go back to top to show you why. See, this went to 18.92. Just going to take away 10 cents for a little bit of wiggle room. So 18.82 is going to be the entry. The stop. Then what we're going to do, I'm going to risk 50 bucks. I always risk 50 bucks on each side of the trade. Just as an example, you guys pick whatever you want to be risking. In that case, it will be 208 shares per one. So again, that's going to have an implication on how much money you need in capital and things like that. So I just use a 50 buck risk just because then I can risk 50 on one, 50 on another. Very easy, nice round maths for when we do these examples. Now my first target, safety target, is always going to be 1 to 1 away. So I've just put in on the same calculator, so it's 24 ticks it says, but we know 24 cents of risk, which means 24 cents is going to be my first target away. And it tells me there that that's 19.30. So I'm just going to draw a line there, 19.30, and we'll place that one. And then what we'll do is we'll come back to top and see if we have, doesn't look like we do. So we don't have any sell orders above us on the weekly, which is fine. So what we're going to do is have a trailing stop for the second one. So same entry, 19.06, same stop loss, 18.82, same risk, 50 bucks, but we won't put a profit target in. So I'm going to click buy on that one. So what that means is if price comes into the trade or into being entered and moves away and creates a new UFO on the way out, then we move our stop loss on the second one from here, to behind that one. And then let's say it moves away and it creates a new UFO, then we move our stop from here to here, and so on. So we'll get stopped out, hopefully at a profit. Also true, let's say it moves away and it doesn't create new UFOs, and at some point as it moves away, maybe it dips a little bit and the climate changes, then we get out then. This is true anyway, whether or not we have a second target in place or not, we would get out if the climate changes. So we're going to be getting out of this trade on the second one. If it goes in our favour on the second one, at some point, hopefully into profit is likely to happen if it goes in our favour. So I'm just going to put a little note on this, and then we'll stop the free stream. We'll continue in the closed coaching and we'll look at your suggestions. So this was placed on the, what day is it? 15th of October. Placed 15th of October in the live, meaning the sort of free session. T2 is trailing, just so we remember that. Okay, so I'm just going to cut the stream to the free places. You bear with me for a second. And I will cut that and then we'll continue in the closed coaching. For those of you that are in the free streams watching this now, or you're watching the recording, hopefully this made sense. If you do have any questions or it didn't make sense perhaps, if you watch more videos, you should be able to get more of an understanding as to what we do, what we use, how we do it, why we do it. Any questions you can email me, becky@traddictiv.com. And then there's also tradewithufos.com/Becky, where you can post questions publicly and then I can answer them there, which might help other people out as well. You can also book one-on-one coaching and get your apps from there as well if you want to. So I will cut the stream now. So for those of you joining on those platforms, see you next time. For those of you in the closed coaching, give me a sec whilst I cut the stream. And it always takes a few seconds too long, I think.